Hi friends, this is Brant Spesshardt with Steward Strategies. Thank you so much for tuning in and investing some time with us. So today we're going to talk about managing your wealth in 2026. I don't know about you, I love this time of year. We have longer days, more daylight, warmer weather, azaleas are blooming, the mattress is around the corner, and it's also the time of Easter. But we also know there's a lot of concern right now. We actually recorded this last Thursday, and since then we've had even more market volatility. So I just want to let you know we are keeping up with the market volatility. We are watching oil prices and how this affects client portfolios. But thank you again for tuning in and joining us as we talk about managing your wealth in 2026. There are 6 key areas that we at Steward Wealth Strategies talk to our clients about and that we incorporate into financial plans: retirement planning, investment planning, tax planning, estate planning, protection planning, and one of our favorite topics, generosity. How can we be good stewards? How can we plan well? But also, how can we be a blessing for others? So 2025 turned out to be a great year for long-term investors. Markets hit highs numerous times last year, but we also experienced a lot of volatility last year. There were lots of ups and downs, and last spring is when all of a sudden there was the introduction and implementation of tariffs, and we saw the market take a big hit, and there was a lot of concern about a recession, inflation. But for investors that stayed the course, that did not hit the panic button, 2025 was a fantastic year. Regarding interest rates, the Fed met throughout the year, basically held steady, didn't make any changes until the end of Q3. They cut rates, and rates were also cut again 2 times in Q4. Now, inflation was a huge concern for folks last year. You know, with the implementation of tariffs, everybody was concerned about rampant inflation, which possibly could have led to a recession. However, inflation pretty much held steady, decreased over the course of the year, but was not as much of a concern as we thought it may have been. And when interest rates went down, that caused bond prices to go up. So conservative investors, or even moderate investors, folks that had investments in their portfolio that may not have been equity based, actually saw a little bit of growth in those conservative investments because there's a correlation between interest rates and bonds. When interest rates go down, bond prices go up. When interest rates go up, bond prices go down. So last year, even conservative investors actually felt a little bit of extra growth because of interest rate changes. Now, with interest rate changes though, there is an effect as far as what we're earning on our savings, or, you know, for one of the most popular investments out there that's considered safe are treasuries. If we look at where treasuries started the year last year and where they ended, there was a little bit of a cut more on the short-term rates. So if you look at 5-year treasuries starting in January of last year, the 5-year was about 4.38%. At the end of last year, the treasury was about 3.7%. Now, long-term yields stayed roughly the same for the 30 years, but those shorter-term treasuries were affected by those rate cuts. When interest rates are cut, we know that has effect on bond prices, but it also has an effect on our savings in the bank. Whether you have savings, money market, or CDs, you just have to know that over the long term, those rates will eventually be affected by rate increases or rate cuts. Right now, just as an update, the national average for a 12-month CD is just under 2%. That's about what it was roughly a year ago. Money markets at most big banks are probably about 0.5%. Look, there's better deals out there with local credit unions or smaller community banks. But if you have a fully funded emergency fund, just know that you're probably earning some interest. It's probably not as much as it was a couple years ago. And that is the right place to have those funds. Emergency funds need to be safe. Now, 2026, what are some things we need to keep in mind? So, this year so far has been a volatile year. We've seen highs and we've seen the market decline. As far as Fed rates are concerned, so the Fed again cut rates 3 times towards the end of last year. So far this year, the Fed has met twice, again, as of the time of this recording, and there haven't been any changes. If there are rate cuts or rate increases, we will keep you up to date as far as that's concerned, because that could affect your portfolio and that could affect some of the investments that you may want to consider. Corporate earnings are something we have to keep up with, because corporate earnings are a reflection on the value that a company is bringing to the table by providing goods and services that consumers are willing to spend money on. And corporate earnings and valuations of companies are important. That is what drives the stock market long term. It's based on those great companies of America, or those great global companies providing goods and services and making money over a long-term basis. But remember, short-term volatility though isn't always based on corporate earnings or valuations. A lot of times the volatility that we see on a regular basis is actually more based on fear and greed, which is a lot of times driven by headlines. And that's why we always have to remember equities, invest in the stock market, mutual funds, ETFs, index funds. It's long term. Many of our clients here at Steward Wealth have been with us 5, 10, 15, 25 years. And you've seen that growth over the long term, but along the way, we've experienced volatility. And when we watch the news and when we read these headlines, we're going to hear a lot of terms: pullback, recession, volatility, correction. There's always volatility in the market, and there's always the opportunity for a pullback, a correction, a bear market, or recession. Correction has hit the headlines here recently, and a correction is when the market drops 10 to 20%. But that type of volatility is hard, but it is part of the normal investment experience. Long-term investors know that investments go up and down in value on a regular basis. But successful investors ride it out. If the investments are appropriate based on your goals and your objectives and your time horizon, then sometimes the best thing to do is try not to let headlines get your attention too much. Because here's the thing, we expect the bull market to continue. Inflation's still a concern, but it's not out of line yet. Interest rates, we'll keep you updated as far as interest rates are concerned. Are there cuts? Are there increases? Right now, they've stagnated. The economy is still showing signs of life, but we have to remember that market volatility is still there. Look at any chart of the S&P 500 for 10, 15, 20, 30, 40 years. Those are the average time frames that somebody needs their money to work and grow, and there's definitely been wealth created. So having a financial plan that is based on your goals and objectives, and allowing your wealth manager at Steward Wealth to help you decide what is the best investment strategy, along with tax planning, estate planning, retirement decisions, generosity strategies, that's all part of the financial plan that needs to be taken into consideration. Warren Buffett has said successful investing takes time, discipline, and this is the hardest one for most of us. As a parent, I pray for this often, and God will test you by teaching you patience, but patience is a virtue. So we at Steward Wealth continue to grow because of you. Thank you for honoring us and blessing us with the opportunity of serving your friends and your families. And because of that need, we continue to expand our team so that we can take care of you. If you have questions about your financial plan or your investments, or if you have concerns, please reach out to us. Our team is here to be able to not only service you, but take care of your family members anytime there's a need. And we want to continue to serve folks like you. Our best clients come from our best clients. And there's a lot of financial people out there that provide great information, but I will say this, there's a lot of misinformation out there as well. So if you have somebody that you feel would be a good person for us to talk to, and if our wealth managers actually sit down and have a conversation with that person, look, you will qualify as an SWS ambassador. Same thing if you're leading Financial Peace University or there's a group and you would actually like to have us come out and speak, please, if we come out and speak to a group, that's a great way for us to share a message, a positive message that many people need to hear, but also it's a great way for us to meet potential folks that might be a good fit for us and that we might be a good fit for as well. So please, if you've been an SWS ambassador, thank you. And if you're considering, we would be honored to help people that you care about. Please follow our team on social media. Follow us on Facebook, Instagram, LinkedIn, our YouTube channel. Steward Wealth Strategies is there. We provide updates on a regular basis. This is a great way to stay connected and see what our team is up to, but also be able to recap information sessions like this. Our website, by the time you receive this, please go to our website. It is new and improved. There's lots of great information. It's refreshed. It looks better, but also there's some great resources on there. Our 2026 key numbers. So if you have questions about some of the tax numbers, the retirement plan numbers for 2026, this is an invaluable guide and resource. Please go to our website, download the key numbers for 2026, but also you can download recent copies of our newsletter as well. So thank you very much for taking the time today. It's an honor to serve you, and thank you for blessing us with the opportunity to take care of you, your family, and guide you with your financial future. God bless you, and thank you very much.